If you dread the process of buying a car and want to avoid countless wasted hours dealing with pushy car salesmen, when you buy your next car, keep listening. I'm going to show you how to avoid the hassle and the haggling when you have to buy your next car. I've bought tons of cars over a lifetime and helped family, friends, and acquaintances do the same. And in this 4-video series, if I can fit it all in anyway, I'll give you the knowledge and the skill to do the same. Welcome to the Money Growth Academy, where we multiply your opportunities for financial success. I know, you're thinking, I thought this channel was about making money, keeping more of my money, and growing that money into financial independence and retiring early. Yes, that's right. But what we found out is that a lot of people don't have the money to actually invest, whether it's in 401ks, an IRA, or just a basic savings account. Heck, according to the report on the economic well-being of U.S. households in 2017, 49% of Americans don't even have $400 in cash in their savings account to take care of family emergencies. So we're going to give you real knowledge and skill to keep more of your hard-earned dollars, to pay off debt, and have more money to invest and become financially independent and retire early. We call it the fire drill instead of the alternative, financial dependence, and working the 40-40 plan. You know, I spent well over 17 years in the car industry, successfully selling, buying, trading, financing, and managing car dealerships. And although I'm no longer in that industry, you know what? I've been able to successfully apply those same skills to get the best deals on cars. And now I'm going to show you how to use the same information to save you thousands of dollars on your next car purchase, so that you can take that money and then invest the difference. So let's get started. This first video will be short and fast, so if you need to pause and rewind, that's okay. The important thing is that you understand it. Confucius said, success depends on previous preparation, and without such preparation, there's sure to be failure. Preparation is true in sports, it's true in business, it's true in life, and it's certainly true in buying a car. The better prepared you are, the better chance you have of driving away with a deal you can easily live with. Some of what I'll share with you will seem simple and commonsensical, but you'll be surprised how many people actually skip this very valuable preparation step. So, step 1, preparation. Know your credit score and credit history. Your credit score will determine the rate the bank will charge you for your loan. The better the credit, the lower the rate. The lower your score, the higher risk. Your credit score is not the only factor that determines if a bank will lend you money. The other factor is your credit history. This is on your credit report. Your credit history tells a lender how well you have managed the credit you've been extended. For example, how many 60 or 90-day late payments you might have had, how many loans you've written off in the past, if you filed bankruptcy in the past, or if you have child support payments that are in arrears. So you'll want to go in and review your credit report. You're entitled to pull your credit report once a year from each of the 3 nationwide credit companies without the worry of lowering your credit score. You can go to either of 2 government-recommended websites to request your free credit report. There's the FTC Consumer Protection website, and there's also one called annualcreditreport.com. Now, we'll have these links for these websites down below in our show notes. The information you'll need is obviously you're going to need your name, your address, you're going to need your social security number, and a date of birth to verify your identity. You can also use websites like Credit Karma. Credit Karma is free and it helps with credit monitoring, so you can monitor your credit. Specifically, you can monitor those changes that might occur in your credit. It provides insights as to what is negatively impacting your credit score and really provides some helpful recommendations to help you improve your credit. Credit Karma is considered a soft credit pull, has less impact on lowering your overall credit score, and we'll have a link below if you want to check it out. Lenders often see people in terms of credit buckets, A, B, C, or D. A credit is golden. This is someone that has proven themselves to be a solid credit risk and will usually be given access to the best rates available. The closer you get to C and D credit rating, the higher the risk, thus the higher the rate. All credit scores are not treated the same, so a 575 score for one person may dictate a higher or lower interest rate on the loan than another person with the exact same score. So this has to do with the makeup of your debt and credit history, and we'll tackle more of that in an upcoming video. Another factor that will influence a lender's decision is your DTI, or your debt to income ratio. This is a measure of how much debt you're carrying compared to how much actual net income you have available. Lenders typically feel comfortable with a DTI of about 40% or less. Less is better. So as an example, to determine your debt to income ratio, divide your debt expenses by your net income. So if you had $2,000, let's say $2,200 in monthly debt expenses and $5,500 in net income, you would simply divide the $2,200 by the $5,500. If these numbers are out of whack, meaning your debt ratio is too high, you may need to reset and work to bring this back in line before applying for a car loan. The second step is to run your finances through the 50-30-20 money balance plan and then apply the 24-10 rule. So you can actually see our video. It's called How Much Car Can You Afford, to get a full explanation of how to apply these two elements to come up with a real monthly car budget that will align with rather than demolish your financial goals. The 50-30-20 money balance plan helps you proactively allocate your net income by helping you set aside 50% of your net income to take care of needs, 30% towards wants, 20% towards savings. So why is this important? Because more people are financially devastated by car loans than almost any other purchase. Using the 50-30-20 money balance plan will make sure you don't overspend for your next car. Step 3, apply the 24-10 rule to determining what you can actually afford. As I said a moment ago, you can see our video, How Much Car Can You Afford, for a full explanation of the 24-10 rule. If the 50-30-20 money balance plan is about getting to the right monthly payment, the 24-10 rule is about getting into the car loan correctly. It recommends when buying a car to put 20% down, finance the car for no more than 4 years, which is 48 months, and keeping the monthly car payments plus insurance to 10% of your net income or less. Now, when you combine the 24-10 rule with the 50-30-20 money balance plan, you'll come to a much more realistic monthly budget for your car and keep you on track financially. And step 4, now that you know what a reasonable monthly budget is for a car and you've saved sufficiently for your 20% down, it's time to get yourself pre-approved at a local credit union for the amount of the monthly payment dictated by applying the 50-30-20 money balance plan and a 24-10 rule. As you're looking at credit unions, I would recommend checking rates and cost of extended warranties of at least 3 credit unions for the best rates before committing. I recommend credit unions because they typically carry lower rates of interest than banks or dealerships. And again, if you must finance, make sure to keep your loan to 48 months. This is another reason why I always recommend buying used. If you're one of those people that need new all the time, or you work from home and drive very little, but you'd like to have something even nicer, you might consider leasing. Make sure to hit the notification bell so you're notified of our upcoming video release comparing leasing versus buying. When it comes to credit unions, you might consider, if you're military or you have a parent or grandparent, brother or sister that is military or served in some capacity in the military, of becoming a member of USAA Credit Union. They typically have great car loan rates. There's also PenFed, also known as Pentagon Federal Credit Union. It's another great credit union that serves active military, veterans, government employees with great car loan rates. There are other ways to belong to these credit unions if you're not military, through some affiliate relationships. You'll want to contact the credit unions directly for specifics. Don't worry if none of these apply. You can still get great rates at one of your local credit unions. You may hear two terms while shopping for a credit union: chartered or non-chartered. If they are chartered, you'll need some type of affiliation to join the credit union through, it could be an association or an employee group. If there are non-chartered, anyone can become a member, whether they're chartered or not. You know what? Just call them on the phone and ask, and they'll let you know either way. As I mentioned before, if you're going to buy used. Let someone else take that first big year depreciation hit. Remember, a car is a depreciating asset, and it's tough to build wealth investing in an asset that reduces in value each month. that you own it. Don't let the value of the car exceed the value of your total investment portfolio. I know I was that guy before, right? So I was young. I didn't have that financial intelligence that I gathered over the years. And I was just starting out and I made those mistakes. When you know what your credit score is and you know your actual monthly car budget, you have your DTI in order, and you're pre-approved by your credit union, you're now ready to start your search.